Everybody. It's 2024, and I'm with two of my favorite people that I love to debate what's going on in the nonprofit fundraising space. I got Matthew Milkarek and Alicia Lifrak with me today. I think some of our longtime listeners know who you are. We probably have some first time here, but thanks for taking the time and getting together. We were kicking around as we were heading into the latter part of 2023. The three of us were talking a little bit about the kind of uncertain anticipation for Giving Tuesday and year end. And now we're into January, and I want to spend a little bit of time today kind of reflecting back on, both what we've seen from the market in general, what some of the studies are showing, and boil it down a little bit because we've seen a variety of results from our clients. And I think we're in this continuing uncertain and evolving time that's got all sorts of different characteristics of how we're collecting data and how we measure donors and where they're giving. So I'm really looking forward to this. But if we take it, I'll kick off and then I'll ask you guys to introduce yourselves as I turn it over to you. But when we think about 2023, that was a pretty volatile year, right? We're heading in with a lot of skyrocketing inflation and uncertainty and stock market turbulence. And I think with that, though, I would at least start by saying we've got still an unbelievably resilient donor base in our country that's very generous. We're also starting to see, I think, a consistent theme about, are there fewer donors giving more? Where are they giving? And I also would suggest that one of the things I want to touch on today is that where there's generational giving, it's almost like half generational clicks between those that are first time donors that are, learning how to be philanthropic to those that are on limited income and perhaps thinking about their estate, but still supporting some of their favorite charities. So, Alicia, what do you think the pulse of the market is? And I know specifically there's some studies out there, the survey of fundraising pulse that we talked about a little bit. What's your take on the market right now?
I feel uncertainty is certainly the key theme, word of the day, if you will. But overall, I think fundraisers remain optimistic. Everything I saw throughout 2023 and going into the fourth quarter, not only were fundraisers, the majority of them reporting feeling optimistic and on track to achieve year-end goals, but performance reporting was showing the same. So I feel like going into the fourth quarter, we had some really good indicators that we were on track. Still a lot of nail biting, and obviously digital results we have in hand and mail results we're still calculating. But what I've seen from the clients we're working with at Pursue and Allegiance, we're seeing some really strong, favorable results for year-end giving as well. So
Yeah.
I feel like there's reason to be optimistic.
I think it's encouraging as well. Matthew, we'll throw it to you because it is the head of our analytics and insights group for a lot of years now. You track several studies, and we're also seeing some inconsistencies out there as it relates to certain giving groups, but also some consistency related to this theme of fewer donors, the same or more dollars. So, Matthew, introduce yourself to
Yeah,
our listeners, and then tell me what you're thinking right now.
certainly. Thanks, Trent. Hi, everyone. I'm Matthew Milkarek, SVP of our Analytics and Insights Group. And so I work with many of our clients to understand and assess their program performance and put it into context with broader industry performance, and agree that early indicators for both Q4 as well as for the year looked good. And one of the earliest indicators that we have is from the Fundraising Effectiveness Project, which dropped Q3 2023 industry performance metrics, and those were just dropped in December. And FEP is really the most current, recent, and objective source for industry insight. And so we really appreciate the work that they do. And what that data is looking like right now, to your point, Trent, is very much a return to the trend line, almost for pre-pandemic trends. And specifically, that means a decline in donors. So it's not great news. And we're looking at flat revenue growth for 2023 overall. So I would say a much less volatile year than 2022, for instance, coming off of a prior pandemic year. But at the same time, even though it's less volatile, it's still a slightly alarming picture, even though revenue is holding, but we're not seeing a ton of growth. I would say, to Alicia's point, many of our clients are matching those industry trends. So seeing fewer donors, seeing flat revenue growth. But we are certainly also seeing pops in area of interest and area of growth as well. So many of the digital programs that we manage on behalf of our clients exceeded projections, and the books are closed on that. Direct mail program performance, which we're still waiting to close and for those campaigns to fully mature and fully realize, that direct mail feels like it's more mixed. Mature, broad programs are trending downward. Average gift for direct mail is up pretty much across the board because those who are giving are really closest donors. The other bright spot that we're seeing, at least in our own client data, so a much more limited data set than the full industry, was around Giving Tuesday and actually December giving. And that seemed to be, revenue seemed to be much higher, much stronger than flat that it looks like for the year. And the other bright spot that we've really found, which is great, is we've seen a dramatic reversal in our response rate declines that we were seeing pretty much through all of last year, them trending downward. Around summer and especially towards year end, they increased. And this is even adjusted for seasonality. So it did feel as we rounded the corner, as we closed out the year, we were seeing pretty strong performance. And so I hope that as the FEP analysis catches up and incorporates and folds in Q4, that helps us really close out 2023, not just flat from a revenue perspective, but perhaps with some growth overall.
That's fascinating. And part of the reason why we love these conversations and to share them with our listeners is because we hope to give some insights based upon our extensive client set across multiple market segments and say, this is what we're seeing. And is the market data going to catch up to that as well? So I think as I reflect back on a few things, 4 years ago, we're at the beginning of 2020, it's pre-pandemic, right? And what a year. And 2020, I think that there was so much uncertainty, but the response was overwhelmingly generous. I don't think we knew what to expect if I reflect back to the early days of COVID and the pandemic. And even then, the inconsistency around 2021, where there was fits and starts as it relates to restarting the economy. So much money pumped into the economy. As we head into 2022, the money continuing to get pumped in, slowing down, and then inflation catches up. I think then, wow, the 2022 headlines became pretty painful. I think that smaller donors can be reactive to headlines, right? If the news tells us to be afraid because dark clouds are ahead, people might start saving for that rainy day. And we do find that more major donors tend to be a bit low, I'd say impervious to the short-term swings, but certainly we've seen that the generosity correlates a bit to stock market, right? If we see bull markets, we see usually more generosity, more robust capital campaigns. If we see bearish markets, we see campaigns either slow down or maybe delay launches until people feel a bit more optimistic. But we got to think 2023 was better than 2022. And I think I want to come back to you, Matthew, in a minute, because one of the things that I'm earlier on, we had a podcast with Jeff Kane who put an article in the Chronicle about where are these donors? I've been of the belief that we need to evolve our tracking of where donors and generosity might be coming from. I don't necessarily subscribe to the fact that we have as few donors that we can actually pinpoint as to where they are. I believe in general that America remains generous. And Matthew, you and I had some great conversations related to the differences between generosity and philanthropic. But I want to throw it back to you as it relates to the industry, Matthew.
Yeah.
We see these studies, and I do think that there is some alarmist mentality, and we're in an election year. We are still seeing some economists forecasting some recession softness. I tend to believe that during presidential election cycles that our government tends to intervene a little bit more to keep things a little bit more steady. I don't know if that's true or not, but it seems that way. But tell me your thoughts on the macroeconomic environment.
So I've got to believe that 2023 performance is ultimately going to shake out and be more of a bright spot than the prior year, 2022. So I think that's good news. I think the way that we may ultimately categorize the year and classify the year is finally a return to trend, a normal year, a typical year, probably
23,
23.
2023 being more of a normal year. Okay. So
Yeah,
post pandemic, we might be settling back into some predictability that we had pre pandemic. Is that you're
exactly. And
thinking?
not the kickback from the great performance and then being dragged down. I think it is ultimately and was finally a return to normalcy. But the problem with that is that normalcy is not good. And so, what I would say is what this year is going to show us, and again, that FEP data, even just 3 quarters in, is validating that, is that donors are continuing to decline. And so we know before the pandemic that was occurring, that was a 10-year, if not longer trend, that fewer and fewer donors were giving. We know that the pandemic incited many folks to give for the first time, but in most cases, they have receded. Those long tail donors have even stopped getting. And we're also seeing giving by individuals declining faster than ever. So I think we're seeing that 2023 and perhaps the same trajectory we're on now in 2024 is really a return to many of those industry trends that certainly are concerning.
Alicia, what do you think about that?
You can get data to tell you any story that you want the data to tell you. And I guess I would counter with a little bit of maybe optimism. I think things are definitely changing, and how we count gifts and how we count donors historically is going to be a challenge for us going forward. If we look at that pie chart that comes out, breaks down giving, and we say there was a decline in individual giving, if you look at the piece of pie right next to it, which is bequests, that number went up by almost the same number that individual giving went down. And so if you take that into consideration, bequests are actually gifts from individuals. And then you add to that foundations, which is where the donor advised funds are getting categorically bucketed. There is still tremendous individual support out there. And I think that giving trend that has increased, take the COVID bubble out, we are still seeing growth in philanthropy. We're still seeing growth in engagement. How we're counting heads has changed, but philanthropy in and of itself is still on a very strong and positive trajectory. So I think the thing that we in this industry need to be responsive to is the fact that donors are far more complex than they used to be. And so we had sort of attribution models that were point A to point B, causal relationships that were really easy to measure. And now we've got folks who might receive a direct mail piece, be motivated by that, but go online to make a gift or maybe give to a crowdfunding opportunity. And we don't count them in the same way. But that doesn't mean that they're not philanthropic, and it doesn't mean that the appeals aren't working. It just means that the donors are responding in a different way. And I don't think that as a marketing endeavor for our industry, we've caught up. And I think that's where we're going to have to really be innovative to meet the donors where they are.
I think you've nailed it. This is why I love conversations with the two of you, because we've been doing this a long time now. And I think the market is responding positively in some areas, right? I think, Matthew, to your point, if we're seeing better response rates and we are raising as much or more with fewer donors, that means that organizations are certainly getting better at loyalty. But we are also seeing churn. We are also missing, I would say, obviously acquiring new donors to the level where our coverage ratio is positive. We're losing more donors collectively, at least how we count them. So I think that what I'd like to open up back for you, Matthew, the big question that I continue to struggle with is, if we're seeing dollars still at a pretty good level, but the numbers keep telling us there's fewer donors, where are they?
I think we have to assume that it's both to some degree until we can prove it out, until we can find them. I love really where Alicia was heading on this, and really just thinking about the ways that an individual can be philanthropic are so diverse right now. And the tools that we have for measuring them likely aren't keeping track of them, aren't really attributing all of the effort that a mass market program or the impact that a mass market program might have on a constituent's behavior. I work occasionally with some clients who are really only interested in measuring the response back to their program, for instance, back to the annual fund. And I bristle when I hear that. It's important to understand the performance around a single program. But if we're not looking more broadly at whether the constituent eventually joined peer-to-peer team, whether the constituent made a major gift, all of these are activities that are outside really the solicitation channel or the solicitation vehicle or program. Yet we know that a mass market program like that can have an impact on the constituents' relationship more broadly. And so, along those lines, if we think about the last 20 years, even the last 5 years, even last year in philanthropy, there are so many ways that a constituent can engage around peer-to-peer giving, through Giving Tuesday, through GoFundMe, for instance, to support an organization, perhaps indirectly or directly, but it's harder to identify and measure these folks. And we know that these donors are harder to find. And I would say a new wave of privacy is upon us that's going to make them even harder to track and attribute overall. I think it's really an evolution that Alicia hit on, that it's no longer about sending an appeal, measuring that direct response, but we are going to have to look more holistically at how supporters are engaging with us so that we can measure the impact of our efforts and really keep track of where those donors are and finding those donors.
It's really great. I love these conversations. And I think we always want to give our listeners then as we pivot to how can they respond. The three of us are talking about a few things in summary here, right? We're not so sure that the studies are collectively accounting for all of the activity. And that's just a function of our evolving industry.